If you look at the share price for JD.com, you realize that it came down significantly over the last few months. From its peak in February 2021, it's lost close to 30% already in terms of share price. But if you put it against Alibaba, you realize that it's done slightly better. Of course, Alibaba had a failed and financial IPO, and that actually happened in third quarter 2020. But nonetheless, today we'll be discussing more on JD.com, whether it's a better investment for you or not. And before I get there, I invite you to smash the like button early because it's taken our team hours to prepare this whole presentation for you. Today I'll be running through 8 key points to help you understand JD.com a little bit better. And with that, let's roll in the intro video. Hi guys, welcome back. Now, China's e-commerce is really growing. If you look at this headline over here, you realize that it surpassed more than 50% of all retail sales. That is why in this channel, we've actually focused on Alibaba, we've actually focused on Pinduoduo, and right now, JD.com. So without further ado, let me introduce you to the first point about JD.com, which is this. JD.com really sees itself as the Amazon of China. If you look at this presentation slide, you realize that it pits its revenue growth rate against Amazon.com. And when presented against other retailers in China, it pits itself against Suning, Sunart, other traditional retailers, both of which are now going to be belonging to Alibaba itself. So JD.com does its business a little bit different. They are not just a platform like Alibaba and Pinduoduo. They actually purchase products, they actually purchase inventory. And they're just not like a normal platform with no inventory at all. And that leads to the second point of JD.com's business. JD.com having inventory creates a low operating margin to its business itself. If you look at this chart over here, you realize that its long-term profitability is pretty stable, but it's actually a very low single digit, 2, 3, 4% thereabouts. Now, if you compare that to Alibaba, you realize that Alibaba is doing 20, 30% in terms of margins, but JD.com has inventories and products. Naturally, the operating margins are lower. That's why the better comparison is actually JD.com's margins against Amazon. And I've actually done the hard work for you. Amazon's margins for the international space is about 4%. For the US side, is about 5.3%. So operating margins wise, I do believe there are rooms for growth. And with that, it could probably lead to JD.com being more successful in terms of a profit point of view. And with JD.com holding products and inventory, it leads to the third point that you need to know about JD.com. It's actually a very trusted brand for home appliances. Now, if you look at this headline over here, you realize that Singles Day sales for home appliances, JD.com was the leader. They sold 30% or more in terms of the total market share for that day itself. Now, when you buy home appliances like ovens, toasters, fridges, all these material, you really need trusted brands. You really need them to last for years and years ahead. You cannot replace them all the time. That's why you're willing to pay a bit more, and that's why you go for JD.com, whereby they actually purchase the products, they do a lot more quality checks in my opinion. So that's why they have been doing very successful in this space, appliances as well as electronics. In total, about 2/3 of the business revenue comes from these two segments itself. The main people purchasing all these electronics appliances are actually in the tier 1, 2 cities, which is Shanghai, Beijing, more affluent cities. And that leads to point number 4, luxury could be a growth driver for its business. But before we touch on the rosy point of things, let me show you something negative. Farfetch used to be a partner of JD.com in terms of luxury space. They are actually a British retailer, but Farfetch has actually moved from JD.com, closing its shops there and moving towards Alibaba via their Tmall platform itself. JD.com is now left without this deal, but there are still positives. First, they still have Nancy Zhang Zetian, which is also China's youngest female billionaire. Nancy Zhang is not going anywhere simply because she's actually the wife of the founder itself, Mr. Richard Liu. So Nancy Zhang is very popular in China. She's the face of this very viral picture, which is a Nai Cha Mei Mei photo. And with that, she actually shot to fame. She was actually invited to do movies and stuff from what I read. Nonetheless, she turned it down and now she's focused on the business itself, helping to drive the luxury segment of things. And not only that, they've actually have someone new on board. This is actually Caroline Scofelli, if I pronounce the name correctly. Caroline owns Chopard, which is a Swiss-based luxury watch. And if you know Chinese affluent people, you do know that they really have a lot of disposable income. Buying quality watches as gifts, not a problem at all. And JD.com is smart to bring her on board. And that's why I believe luxury segment is somewhere whereby JD.com can show increased revenue growth down the years. Now let's move on to point number 5 about JD.com, which is this. JD.com is now the third biggest player in China in terms of the number of users for e-commerce. They are third only to Pinduoduo and Alibaba. and they're reflected in the blue line over there. You realize that that blue line also is catching up on the white line, which is Alibaba. And that's because they seem to have caught some headwind in growing users in a tier 3, 4, 5th city. This article really shows the point number 6. 80% of all new users seem to be coming from the lower tier cities of China, and that's where hive growth really is. JD.com really has that edge now, moving to the lower tier cities. And just in case you don't already know, JD.com has ownership belonging to Tencent. And Tencent having stakes in JD.com and Pinduoduo, they allow their users to purchase very easily WeChat Pay and on both these platforms. My concern, if you're a Pinduoduo investor, is that JD.com is moving to that terrain. And then if they can still use WeChat Pay, the whole ecosystem, would users actually start to migrate from Pinduoduo to JD.com? That's a concern that I might have. So JD.com not only has WeChat supporting it, they also have a next edge. Point number 7, JD.com may have superior logistics network. JD.com has actually cut out its logistic arms, JD Logistics, doing a separate listing for it very recently only. So if you look at JD Logistics revenue growth, you realize that it's growing at a tremendous pace, correct? 2019 jump to 2020 is an accelerated pace, growing at close to 70% thereabouts. And that's partly driven by COVID. More and more people are adopting online purchases. So JD Logistics has been a real growth driver, and a large reason for it is because it has more than 1,000 warehouses all across China, which allows it to really do same-day delivery. If you look at Amazon Prime, you realize that they can deliver within the same day, correct? JD Logistics actually is empowering JD.com to do that same part. They do 90% of all orders on the same day. And to do that in tier 3, 4, 5th city where infrastructure and roads are not as good, I think that's a phenomenal achievement. That will pose a challenge for Pinduoduo and also to Alibaba. JD.com also has this, which is JD Plus, a paid membership subscription very similar to Amazon Prime. So if they can grow recurring revenue from paid subscription, naturally there's a very easy profit pie to grow. Naturally that will bring up profits for the business itself. So if you're keen on e-commerce, let me introduce you to today's sponsor for our video, which is Skillshare. Skillshare actually has a lot of courses which can teach you things on e-commerce, entrepreneurship and freelancing. There are things that can help you learn to sell a bit better online. There are things that can help you build your own leadership, how to recruit members in your entrepreneurial business, and especially do marketing, because any small business requires a very strong marketing framework. You can learn marketing on Instagram, such as this featured course over here. Learn more on Skillshare. The first 1,000 to click the link in the description below will get a free trial of the Skillshare premium membership. And point number 8 is JD.com is already profitable. Unlike many e-commerce or any high growth company businesses out there, JD.com being profitable is very important. In my opinion, they can use operational profits to reinvest into the infrastructure, into logistics, to further strengthen business without tapping on capital markets. Now, JD.com's profit levels, let's pull up this chart for you to see over here. You realize that its profit has swelled and grown since 2019, where it turned profitable for the first time. Now, just now I also mentioned that JD.com has actually very low profit margins, correct? 2, 3, 4% thereabouts, whereas Amazon is doing 4 to 5+%. Imagine if they are able to increase profit margins through subscriptions, through better operational performance. What that could mean to operational profits would definitely be positive. The second part to note also is JD.com has actually listed 2 of its subsidiaries, JD Logistics and JD Health. These 2 subsidiaries are currently still loss-making, but if they turn profitable, imagine what it could do to the parent company. It will naturally bring up profit levels, correct? So many years ago, Amazon Web Services, AWS, was a drag to the business, but right now, Amazon Web Services is the main driver of profits. So that could be something that could happen to JD.com also. And to end things with, let me show you their revenue momentum. This chart over here really shows things are really looking positive. From 2015 to 2020, you realize that compounded annual growth rate for revenues have been growing at 33%. But they've actually surpassed that growth rate for last year. Maybe COVID played a part, but if they can surpass that high growth rate already, it should naturally bring about more optimism for investors. So my guess is JD.com is really stepping into tier 3, 4, 5th city, something that Alibaba is going to. This is a space that Pinduoduo has dominated, but these 2 giants are now moving to that space. And it's a space that needs logistics, something that JD.com is very strong in. The pie that Pinduoduo actually has is there to be won, and my belief is JD.com and Alibaba are both going to eat into that space. And if you haven't seen before my presentation on Alibaba, inviting you there also. Alibaba reported very good revenue levels also, but it has seen its share price tank even further than JD.com, like what I mentioned at the start of the video. If you're keen to find out more on Alibaba, look for that tutorial because he can help you explain more about what Alibaba is facing right now. With that, I'll sign off from here and see you there. Take care and goodbye.